Hey guys, we're doing this webinar for you so you can get some good details of how to trade with support, resistance, and trend lines, and simply price action itself. We'll talk about entries, exits, stop loss, take profits. So there's a lot we're going to cover in today's webinar, and we're looking at a live market. So take some notes, and we'll talk about some trading opportunities that may happen. But realize the disclaimer that's there, that past performance is indicative of future results, that this video is for educational purposes only. So if you decide to take these trades, it is for your own risk that you decided to pull the trigger, and that you're responsible for any winning or losing trades. Okay, so I'm going to be walking through several sectors of this webinar. So let's just do a quick mic check, make sure everything's great. Okay, sounds like audio's good. Yeah. Right, so you want to check your audio and see if your audio section is actually muted out, or make sure that if you're using a headset, then it's make sure that you set it as default. Okay, so then you can hear me. Okay, all right. Let's talk about just support resistance. Okay, we're going to go through every sector, some stop loss rules, as well as take profits. But with support and resistance, if you use the bigger time frames, there may be less opportunities. So you can see the market comes up, gets rejected here. This is the opportunity, or the trading opportunity I'd be interested in, is the turnaround point right here. You can see that this market is ranging. So right here, the support level, this market is rushing down to this price. So I'm going to be very interested to see what actually happens at 1.3487 area, if this market is going to reverse there. Okay, and then really this support level right here. You can change these trend lines of support resistance on whatever time frame by just right clicking and going to common to visualization, and you can specifically assign it to whatever time frame so you don't get confused. Okay, so in this area you can see that the market did rush down, bounce off a little bit, and then reversed and broke out. So this was actually possibly a losing trade for you. But if you were able to take the breakout, so what I would look for is, here was a support. The breaking candle would be this close of the candle as an entry point. My stop loss would be above this little wick high, or even this previous high, this candlestick here. And then my take profit would be down towards this support and resistance level. Okay, I would maybe even protect my position. This trade is just a small trade, and I'm looking to just take some profits here shortly. But that's the general price I'm looking to get, is right here. Okay, so support and resistance is all about looking at areas that the market may bounce off of or break out of. Okay, so right here you can see the resistance right here, resistance right here, broke up. There was your entry point on this candlestick right here, or even this smaller candlestick. You can see it was kind of a weekend because there's a gap. The market comes down and retests with a long wick. So this would have been a great candlestick to be very interested in as your entry right there. Stop loss above this actual candlestick itself. And I gave you that awesome indicator that shows you this. And look to take profits to the previous resistance level. So you had plenty of time. I mean, this is a whole week's time to benefit from this trade. Okay, so you have like almost 2 weeks to react to the situation. Okay, so again, bounce or break, guys. So when it broke here, that was a great opportunity to enter there. You could have moved your stop loss to break even easily, and I mean, this thing is continuing to go downwards. So it may have a hard time breaking here, may pull back, so it may break down, pull back. Right around here is where I'm looking to re-enter and have a stop loss right there, and then look to take profit down in this general area here. So that's just kind of a quick rundown on how to trade support resistance. Okay, let's talk about trend lines. Okay, so what are trend lines? We can look at a different market if you want to. So let's actually look at the Swiss franc. Let's go to the day chart and let's go clean. So what is a trend line? So trend lines are very simple. It's typically a 45-degree angle So you have a high and a lower high. You considerably want major swing points that are obviously, you can see how it turns around like this. These are points that I'm going to be interested in. And again, trend lines, you can look for the bounce of the trend line or the breakout. Now, you actually need to have 2 points of respect in order to find a bounce. So you have 1 point, 2 point, this candlestick right here where it comes back up and pulls back down, that would be an interest that I'd be in with the entry point right there, stop loss right there. You can see it breaks downwards a little bit and then pulls back up right around here, okay, as your entry point. You can use this candlestick as reference, respecting this trend line as your entry of the close of this candle. Stop loss above this wick high here, this little tail right here. And you can see that it pulled up, couldn't break this trend line, engulfed, and then tumbling downwards. And again, same pattern, break upwards, tells indication that it's rejecting it, selling off. Okay, so there's plenty of profits there, and then pulling back up. You can see that this was a reversal pattern, kicking off this trend line. So another opportunity. So you had 1, 2, 3, 4 in just like a week's, or this is probably 2 weeks time. 4 or 5 great trading opportunities that could have produced you over 130 on that one, 100 points on that one. So probably like 400 pips is what you're looking at with just this trend line. And this is just a bounce off the trend line. So that's the way you can look at it, is you're referring to a high. So you can see it's kind of topped out like a double top. We have a top, top, and then we created a lower high, so that's something I'm interested in. We have a low, and now we have a lower low. So that's obviously a trend. And those are some trading opportunities I'd be interested in, is right here, 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 and here. Okay. So like I said, some of the stop loss rules that we have is behind the wick or the previous high of resistance or support. You obviously want to have good ratio and good money management in check, okay, to take these opportunities, just in case if you analyze the market incorrectly or just wasn't in the game mentally or whatever, then obviously that's something important to consider as well. So how do you trade a trend line break? Well, trend line break is very simple. You see a trend line and you're looking for a close on the other side. So this would be the entry point of this candlestick. In order to really figure out where to put your stop loss would be behind this candlestick itself. Could be a reference point behind this trend line, okay, or because you're looking at a horizontal perspective as well as placing the stop loss, probably a little bit greater than 50% or 60 or 7% of this big candlestick, so right around here. You could look for the retest, which it did retest. I mean, if you want to be really tedious, you can see that if you want to nick these long tails here, you can see that it retested off precisely off this trend line, so that could be your entry point. It's actually kind of hard to be precise like that, but if you're there, you can look for that reversal pattern on a smaller time frame to benefit from this situation. So once this candlestick closed and kicked off this trend line, this would be so it closed right there. That would be an interest of my buy opportunity right there. That would be a buy signal. Stop loss behind this wick, and you can take profit to resistance or support. So you can see the market just, let's actually put a line right there, ding off this resistance. There's your support. So it broke support previously, comes up, breaks this trend line, and gets rejected off this resistance level because support becomes resistance. So entry based on this candle right here, close right there, stop loss there. So if you had a stop loss of 40 points to gain possibly 120 points, so good risk reward, the opportunity makes sense, and you hit your target. Okay, So that's one opportunity you can look for. There are smaller trend lines, so you can see that this is a small swing low, smaller swing low, and there is this trend line, 2 points of respect. Break of the trend line, entry behind this candlestick itself, behind this trend line or this candle right here. You can see you could take in profits a little bit earlier than this swing low because of just less information, and that we can see that it's really struggling to break this price. And we can see that there was a reversal candlestick pattern right here, so you had a couple days to react to stay in the profits. If you didn't take that, I mean, here we would have a little bit of a drawdown and then come back to the previous low. So either you moved your stop loss to break even before this broke out, but if you took it from here down to this general area, that's an 80-point trade. Okay. So another trend line, you can either take this bigger trend line, or to get more precise, this trend line like this. Okay, so we have 1 point swing high, a lower high, and a lower high. So my breaking candle could have been, I mean, we could be really tedious to say that it's this long tail because it has a lot of upward pressure, or this candlestick right here. So if you took it on this candlestick on the break of this trend line, stop loss behind this point right here, you could look for either a 2-to-1 or greater than as your exit strategy, or you could see that this might have been a place that it may reject, but because it broke such a big trend line here, we could look at carrying this quite some time. So I'm looking at either a turnaround point either right here, this resistance, or this resistance level here. But when the market comes all the way up here, then I'm going to be very interested to see how it reacts here. I'm going to be looking for a reversal pattern, meaning that it's going to come up, bounce off, look for tails, and look for a reversal trading back down to support. Okay. So again, the trend line break, the actual stop loss rules and take profit rules with trend lines, as well as we covered the support and resistance. So how does Magic become, helpful? Well, basically, some of these opportunities may happen at any time, especially with whatever time frame you decide to trade off of. So you may see this same scenario on a smaller time frame, and it breaks out. So, for instance, on a smaller time frame, it's consolidating like this, and then you're looking for the breakout on this candle. Okay, and that's where Magic can be very helpful to take advantage of these breakouts like this. So if you can imagine, you could add a pretty small stop loss to take profit of the breakout of this whole run right here, what the market just did. Okay, so or even benefit from a small run this way. So it might have broke downwards a little bit and take some profits that way, and then when it reverse, you saw a break of this high right here. It comes up, comes down. There was a breakout right there, smaller resistance level, and I mean you can hold on to this thing for 7-8 days, 200 points take profit, possibly a 40-point stop loss, depending on how you play this situation. Okay, but the value of Magic is simply just to use the break command and look for the break. So this was resistance and it broke out. The interest I would have with this situation would be the entry of this close of this candle, stop loss behind here. So I actually took some profits because I'm kind of short-term trading this and looking for it to overall. It's not going to go there directly, I don't think. I think it's going to work its way up towards that price right here. Okay, around 0.9123 is the general area I'm looking for it to move up to. So I might take some profits, and then once it gets, I might look for a pullback, but I'm interested here for my stop loss or a long tail entry point for a continued move up of the uptrend. Okay, so Magic becomes really helpful, especially if you look at this area here. If we kick down to the 1 hour chart, and I'm just going to kind of simplify it for you guys. So some people use the big time frame to find direction, and what they'll do is look at the smaller time frame for the breakout and so on and so forth. So you can take these same trades, like right here. You have this low. Here's your breaker trend line, kind of goes downwards. This is kind of the retest of this trend line. If you want to get tedious with these wicks, look how precise that is. Like I said, with the smaller time frames, you can get more precise. You can see that there was this wick here and this wick right here, this tail. You line them up. There was a breaking candle, so you could have broken even, but in reality, this mark just spikes up. This could have been fundamental news. Kick off this trend line, so you got a long tail right there. That'd be your entry point. Your stop loss above here, and I mean you could take this down, take profit rule back to the previous low, or you can use a trend line to cover your profits like this. So you have plenty of time for it to run down before it breaks and goes upwards. And isn't that funny how this works too? Look, how it breaks. Here's your entry point. You could just take this. You might have got stopped out if you had your stop loss right here. But this is another reason to get in. So you had a pretty small stop loss right here. But if you were interested, look at this. Just dings off this trend line here. This price right here. Look at this thing, just ding off of it. So once this formed right here, this would be a great entry point. If you were to take off the retest of this trend line, you might have to refer previous low back here on the left to find your stop loss, but behind the trend line as your stop loss, your entry right there, or even right here, the close of this candle and stop loss there. And I mean, this thing just kept on running. I mean, look how far it just takes off. Okay, so like I said, some trades, this one right here, this break of this trend line might have not worked out for you, but if you were to take this trade right here, I mean, it would have made up all the losses that you can imagine. I mean, this thing just went over 200 pips on the upswing. Okay, but some people like the smaller time frames to refer to this high and this low, and then looking for this breaking candle like this, and their stop loss behind this low here or behind the trend line itself. Again, if you want to get tedious and look at the retest like this, okay, you could consider the wicks, but look how like precise that is. I mean, this thing is just breaks out, okay, so it kind of struggles right there, kicks off this trend line, so you could enter either here or look for these tails right here or this candlestick, the engulfing pattern. That would be my entry point right there. It's kind of confirming. Then I'd put my stop loss behind here and look to carry it upwards. Okay, and you can see this thing just continue going upwards. So pretty cool stuff, right? Awesome. So look at when you have the indicator that I sent you, you'll see correlations between the trend lines and support and resistance, like the bounce and the breaks and retests. You'll see correlations of this situation. So if you see this candlestick with long tails, that would be a signal to enter. That would be your stop loss. I mean, look how small of a stop loss you have, like a 12, 13 point stop loss. This is on the 1 hour chart to take profit ratio, which is 40 points. So pretty good. I mean, this is a day's time. And you might have wanted to, depending on how you trade, you might have wanted to take the break of this line. And that's the great thing about Majestic, is you could use this as a reference. You have a high and a high. And so if you really believe that this was an uptrend, this would have been a breaking candle that if you were asleep, you might have had this information to put your stop loss there because of this swing, or this one right here. Okay, and then here's your breakout. And if you want to get tedious again, you can look at this. It's not really a full retest, but it's retesting this support instead of this high here. So you can see how it kicked off there and is continuing going upwards. Okay. So like I said, if you're not able to pull that trigger right there, that's where Majestic can assist you to automate your trades. So again, this can happen while you're asleep, at work, or simply just not around. So we covered some of the stop loss and take profit rules, and so we talked about support and resistance. Does anybody have any questions yet? Oh, that's good. So it's helping you out. That's awesome. Okay, great. So let's actually talk about some indicators, the indicators I sent you, as well as the money management and the trade journal. So those are just trade logs. You just plug in how you did the week and you review it, and you can look at your trade history and see how you improved. You can drag and drop from your history to your history to your um, account here. And once you do that, then you can review your trades, seeing where your stop loss was, your take profits. Was it too small? Were you using proper money management? So on and so forth. Okay, so those are things that you want to consider. Is if you're able to review your trades, kind of like back testing, forward testing, you're really just getting the idea of how this all works, and you're ready to trade live. Okay, real money, make some money too. Okay, so these indicators I'm talking about are the ones that identify either these candlesticks right here, this long tail, as well as these ones right here. Okay, long tails. So if you see that this was a great tail right there, that could be your entry candle, stop loss there, and just ride it up. But the best way to use this indicator is, it works on good on trends, support resistance trades as well. It's just if it correlates to a break or retest of the trend line or the support resistance level. So like I said, with the euro dollar here, I'm going to switch over to the euro dollar. It would have signified this big candlestick right here because it had a long tail. So that would be your entry point. You could put your stop loss there, and this is the day chart, so you could have taken this down to 250 pips or longer. So if it correlates to support and resistance, like I said, here's your tail. You found support. Okay, so right here, this is something that you would have known about right here. This is the candlestick would have notified you with. So you could have got entered right there. Your stop loss right there. You can see it just kind of went sideways a little bit for a little bit, and then it took off. Okay, this other indicator that I gave you, the mother candle, what it is it looks for the big candles like this, and then it looks for the side little baby candles. So let's say that this is the mother candle right here. So you have a high and a high. So it considers the high and the low of the candle, and it goes sideways, 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 these small candles, and then what you're looking for is a break of the range of this high and this low. So the breaking candle in reality right here would be this candlestick right here. So you can see it break out, close above it, or you can take the retest, just like the other indicator I just told you about, and then trade upwards. Pretty simple stuff, right? Awesome. So let's actually do some market analysis right now. And so I can kind of walk you through, I just showed you, some great trading opportunities, but let's actually talk about the live market and how to approach it. Okay, so I'm going to cover just the Aussie, the CAD, and the Euro Yen. So you guys can review these trades, see if they actually worked out and why I entered and why I exited. Okay, so I'm just going to walk you through the trades that did happen this last month that were just awesome on the day chart. You had a trend line like this, and here's your bounce trade, your engulfing pattern. Beautiful, back to the previous high, take profit. Then I had a trend line to refer to, so I took this trade right here, enter right there, stop loss there, and look at this thing. It just took off. Like it came up, hit this previous high, comes back down, creates another candle, and you can see that there's a lot of upward momentum. So there's 1, 2, 3 beautiful trade setups, and I hope you took all of them. Here's another one, but didn't go all the way high, so if you took profits a little early, that's great. You can see that this was signs of exhaustion, going sideways, hitting resistance, creating a double top. This is called a double top because the highs are about the same. Here we create a neckline. Okay, a neckline is just support and resistance, but here's your double top, your neckline, and we've broken, but we're retesting, so you can see how it's reacting right here on the left hand side. It's kind of what we're doing right now. Okay, so I actually entered the trade based on this candlestick pattern, My stop loss is above here. So my projection on this market is down to here, right around, let's see here, 0.90090. Okay, so that's just my general target. So I have a pretty decent stop loss to take profit ratio, and this is a trade opportunity that I don't have to sit there and hug my charts. Okay, so this is more of a trade that's kind of a swing trade, meaning I'll be in the trade for a lot longer. Okay, so a couple reasons why I got in. There's a trendline break, so this is a reason to get in. Stop loss above there. You can take in profits right at the support level. Okay, expecting it to bounce. Broke through, came back up, retest, and you have an engulfing pattern. So right here would be my entry point based on this candle or this candle right here. Stop loss right there. And it may stop me out. Okay, and I'm looking for this to continue going downwards. Looking at a 4-hour standpoint, and if you like to do multiple time frame analysis, this is something you do want to make sure you have practice with. But again, here, I mean, just to get more precise, here's your resistance. We talked about bounce trades. Long tail, that'd be my entry point if you want to get really technical. Stop loss above here, or you could simply look for the breaking candle right here, which I got in right there. Okay, continuing downwards. So I'm expecting this market to consolidate, hold this price right here, and drop off. Okay, and if you're not in already, like I said, this is the 1-hour time frame. In reality, you want to be very careful when you use multiple time frame analysis, because some people, if you don't have enough practice, then it is kind of confusing. But overall, on the day chart, I'm looking to trade downwards. You could have got in based on the break of this smaller trend line. You can see this is kind of a gap candlestick, but you have these reference points to refer to. This 1, 2, 3 break, long wick, indication of downward pressure, entry point on that candlestick, stop loss right around here. But because I'm kind of swing trading it, this is my reference point of this previous high, is where I'm putting my stop loss. So, like I said, I'm in the trade, looking for this to drop off. So that's kind of the way you can look at technical analysis, is you're looking at the bigger time frame to have a lot more information to say where it's going to go, or the possibilities of it going that way. The US CAD is something I'm just looking at the exact opposite of where I'm looking to get in as far as entries and exit with the Aussie dollar. So if the Aussie dollar is going downwards, then I'm looking for this one to actually go up. So you can see there's a long tail. That was my entry point, just like we talked about, my stop loss right there. And again, if you're using Magic Stick, that's awesome. You could take the break of this high, signifying it's going upwards. We talked about support and resistance trades like that, or the break of this low. So we have consolidation. So if I'm not right on this trade projection, that's fine. I could put sell break here, buy break up here, and it may break down here and continue going down to over here on the left hand side. It's previous support and resistance over here as my overall target. If it breaks this high, then I'm looking to take some profits right here. Here's one level, and here's the other level. Okay, so if it breaks here, I could possibly look for it to come all the way up here. But right now my target's right there. Okay, so I have about 2, 4, 5 lines. That's probably the most you want to use as far as support and resistance. 4-hour standpoint, okay, see that line kind of look a little different on the day chart in comparison to the 4-hour chart. This is actually a wick on the actual 4-hour chart, and then I mean there was a breaking candle this way to trade downwards. So we're looking to buy this. I mean there was support here. We created a lower high. That's kind of the reference point I'm looking at, is we're creating a lower high here and kind of engulfing. So if you're not in already, what you could do is a buy break command, because it hasn't closed yet. That would be your entry point. Considerably your stop loss either here or here, and just have a good take profit either up here or here where I'm looking for, and you just refer to support resistance as your take profit. Okay, 1 hour standpoint, if you want to get really tedious, you can get more precise, is that you would be in already because it broke this resistance here on the 1 hour. So this would be your breaking candle. If you're in, like I said, that's the beauty of Matchstick, is that this may be, because I'm recording this for you guys and having you review it, and some of you may have been at the webinar and some of you are looking at the recording version. That means that the break of this resistance could have happened when you weren't around, and this is what Matchstick could have done for you. You could enter the trade right there. Again, you put your stop loss there, take profit either previous resistance. This would be the more resistance level on the 1 hour standpoint for your take profit. So I have good risk to reward. So there's your entry. I'm looking to risk 27 points to possibly gain over 78 points. Okay, last pair that I'm going to analyze here. So if you guys have any questions, we're going to do a Q&A at the end. And yeah, hopefully you enjoy this for your review. And I'm actually going to, and when you place a trade, you already want to know what you're willing to risk and plan your trade and trade your plan. I'm kind of, this is exactly where I would actually have my stop loss. I don't know why it went down there, but that's where my stop loss is at. Okay. So if this market reverses, then I'm out on this trade. Okay, so it's a considerably smaller lot size to this account. Looking at the day chart, so just kind of analyze this really simply. Okay, so what I'm looking for is resistance, resistance, support, support and resistance. So I have 4 lines. Okay, so when the market gets down to this price, I'm pretty interested to actually get out, okay, and actually look for a reversal and possibly look for a bounce trade going back to resistance. Okay, so small trade. I think in order to take this trade, you might look for a pullback. So this is a pretty big candle. We may pull back like this. So entry point, pulling back, stop loss right there. Overall, continuing downwards. Okay, so you have to realize the market doesn't just go from one point to this point directly. It's you might be able to catch that move, but you can kind of see how it kind of stair steps, where a big candlestick pushes down, so it's tempting to get in there. Then it pulls back to retest. The retest, you're going to have a lot less drawdown and a better entry and exit. So if you got in right here, so how it broke down, pulls back and gets rejected. This would be an interesting candlestick. Stop loss right there. You can see there's 2 tails, and I mean you have a really good risk to reward. Stop loss there, take profit there. That's 400 pips, and you'll be very happy that way. Okay, so down here I'm looking for a reversal. Looking at a 4 hour standpoint, I mean it just broke these lows, and that's probably why I had my stop loss right there. Okay, and again, you want to just follow your rules. You don't want to do what I just did with my stop loss. So if it breaks this, so that's another reason to get in. But what I look for on the break of this support level, because of this drawdown, is possibly a retest after the breakout. So it may break down, pull back up, suck back up to right around here maybe, and then drop right back down. 1 hour time frame, kind of hard to get precise, but if you were to get in, this would have been the trend line that you would have referred to as right here. You could have got in this candle, a little bit of a drawdown, but maybe this trend line would have been more beneficial for you. So sometimes you get in early with trend lines, so some people can't, they're not patient enough for a pullback. So breakouts, they typically have a pullback. You have to realize that, so you may want to consider smaller lot sizes on breakout trades. The more precise entry points of breakouts is the retest. So you can say break, pulling back right around here to possibly reverse in this general area here with this trend line. So again, we talked about some rules. If you want to be really precise, I mean, this is the candlestick you'd be interested in. just showing some downward pressure. Entry point based on the close of this candle or the engulfing pattern. Stop loss there, and you could hold this thing. You would have had probably an 8-point drawdown and 70-point take profit. Just big take profit. Okay. So I'm actually looking to actually get out of this because I'm looking for a possible pullback right around there. Okay, so it's broken out, small retest, but because it moves so quick, I'm actually looking for it to pull back right around here as it hasn't retested that. Okay, so what we're looking for is the break. That would be your entry point right there. Taking some profits. Now it's just consolidating. This is actually the hours where it's really slow, and I'm just this market may reverse right here. So there's a possibility as a small bounce trade right here, but overall, looking at the day chart, it's a downtrend. I'm looking for sell opportunities. So overall, possibly a pullback right here, but not to break this high and trade downwards. So some of you, what time frame's best? Well, depends on how you want to trade. If you use the bigger time frame, it's going to be easier for you to just take more profitable trades that you don't trade as often. So you look for the obvious trendline breaks, the support resistance bounce trades that we talked about. So this would be a great example right here. 1, 2, 3. So there's questions that do you want 2 bounces, 3 bounces? Certain situations, if you feel confident, 2 bounces before the break. But if you have 3 points of reference, you can see this is a wick instead of the body, because if you would have considered the body, this is more of a false break. So we have a wick and then the body, and then the body, wick, body. If you have that kind of situation, typically the breakout is just clean. So here's a clean breakout, small retest, and I mean, just if you held on to this thing for a week or two, you can see how it develops, and that's the trading opportunity that you're looking for is right here. Okay, any other questions? So like I said, it depends on your schedule. If you're really busy and you're not going to be around your computer a lot, the bigger time frames are going to be better for you. If you like the smaller time frames, like some of you are asking, do you use the 15-minute chart, 5-minute chart? Yeah, it depends on how I'm feeling and how confident I feel. But if you decide to do that type of trading, you want to just stick with that time frame. You don't want to do multiple time analysis. That'll just confuse you all the time. Okay, so what you're looking for here, high, lower high. You can see the breaking candle, but look how big of a retest you had. It held towards this support resistance level here, but because we have this high and the reference would have been this low right here as your stop loss. So the breaking candle, pretty big drawdown. If you want to be more precise, you would have looked at this support resistance trade right here, support. If it held above this price, which it did, then you can see it kind of shuffle about 50 to 80% of this candlestick right here. Then your stop loss would have been right there, and you could have rolled this thing up 30 pips or more. So just stick to that one time frame. It's a lot easier. This high, and then if you want to cheat, that's kind of it's not like a strong swing point. You can see the difference between this swing point because it moves differently versus it kind of meander to the side then drop as a swing point. So this kind of trend line like this, you can see that to the pip, it actually bounces off the trend line. So that could be your entry point, but your stop loss maybe 5-10 pips below that line, or around 20 points. Then hopefully you don't get wicked out. But here's your reference right there. That would have been my stop loss right there. Oh, this is a 5-digit broker, so that's 8 pips to possibly gain 13 if you took the previous high, or if you carried it on like this. That's a pretty good risk reward. But like I said, some of you like the smaller time frames because the low drawdowns. that's fine. You can use the smaller time frames. It works the same way, the same rules that we talked about. And yeah, just trade with the trading plan and just automate it. So that's the automation of it. Is here's your trend line. You had all this time to put in buy break right here. Okay, so once the market, this could have been the time where you might have been asleep. You already knew where your stop loss is, right around this general area, because this is where it's shuffling, acting as support. And here's your breakout. So the next morning, you might have been either up a little bit or down, because it is a smaller time frame. And then you can see that if you would have held on, you easily profited. Okay, so look at this trend line though. This is a trend line. Here's your breakout trade, and then to a pip, your retest. This is the situation that you're looking for, really. Look at that. You could have took on this candlestick, stop loss behind it, because you have a reference, you have a trend line or support resistance level that correlates with this situation, and then you have an engulfing candlestick. So if you saw this white candlestick close, that's where I would take it. Stop loss there. You know, some of you would say, well, we'll bounce off this trend line. No, you got to think that it was a retest of this trend line as the reason to get in. So that was your reason to get in. Stop loss right there. 8 pips stop loss to 35 point take profit. So really good risk reward. Alright guys, and this is another reason that you could add a position. Okay, is either the break or the retest of this trend line, and so on and so forth. You don't want to overtrade, but just make sure that you keep your money management in check. Okay guys? Right, any questions? So we talked about time frames, what's best. So figure out your schedule. It's going to be best for you when you're looking at the markets and when it's moving fast and when these opportunities arise. Like I said, if you're someone that is really busy, then we do think that the bigger time frames are just easier to spot these trade setups. Okay guys, well this video is recorded and we're going to be posting it on the website for you to review. Alright, take care.